My name is Heydon Hall. I'm the Chief Information Officer for Regent Insurance Group. We are part of the Imperial Group in South Africa, which is one of the largest listed entities on our JSE. We provide services both in the short-term space and in the life and in the commercial space from an insurance perspective. It's actually quite interesting because I think all of the insurers find ourselves in a similar space where our big challenge right now is not necessarily using technology to disrupt or to create new innovative ways of interacting with customers. I think all of us are at a point now of just trying to standardize and trying just to get a handle on the multiplicity of platforms that we're on. And so the big focus in terms of innovation within the IT space right now is just getting onto common platforms. And where we do see innovation is really around the product, speed to market of the product, the ability to have straight-through processing from multiple platforms that sit outside of our environment. And we see that the ability to disrupt other business models is in the efficiency, the understanding of information, the ability to interact with the market faster than the next guy on the block, and to be able to innovate in a product space. But all of that is driven by information. So it's about the ability to gain information before you're in front of your competitor, use that information to make intelligent decisions and to create products that benefit the customer, and to be able to then use the channels available to you, including digital channels, to actually be able to market that correctly and market that in a way that you gain the market share away from your competitor. It's not necessarily new to other markets in the world, but certainly in South Africa it's something that's picking up, is being able to have almost variable insurance based on your behavior. So all the vehicles that we have telematics on, and it's in many ways a South African nuance, is that any vehicle of a specific value has to have a tracking device in it. And that's purely because of the hijacking volumes within South Africa and the ability for us to ensure that we can find a vehicle if it is hijacked and so still keep the asset value. And because of that, purely because we can track a vehicle, it comes with a number of other benefits. It comes with the ability to track driver behavior. What is the stopping speed of a vehicle? What is the amount of G-force around the corner of a vehicle? What is the acceleration speeds of a vehicle? And based on that driver behavior, we've been able to now tailor-make products specifically for customers with variable pricing points based on their driver behavior. So that is one way that we're actually using technology, not necessarily technology from our space, but third-party technology, integrating that into ourselves and being able to use that to actually drive competitive advantage and differentiation. Another space where we're doing that from an efficiency perspective within our claims area is it's always a challenge within the supply chain to manage various or a number of suppliers to deliver a single service. And so we've integrated together with our assessors the ability to not only take in all of the requirements of the vehicle that needs to be assessed, so what the damage is, but also from the OEMs, all of those parts prices. So as soon as that assessment comes in, we understand the vehicle, we understand the part, we understand the cost of that part from various suppliers, so that within our standard panel beating supplier arrangements, we can then actually judge, is this price correct? Are we being taken for a ride? Is this the average price for that particular part for that vehicle? And so we can manage the turnaround time of that much quicker. And we can ensure that we actually get the best value for money, not only for the customer, but also for our back pocket as well. I think major disruptors in the insurance space is a number of things. On the one hand is self-insurance. The intelligence that individuals are building about what is actually important to insure, what is not necessarily important to insure from the perspective of saying, I'm happy to use this based on the asset value and the depreciation of that asset over time, and at a point saying it's not worth my while to insure it. So there's an intelligence being built from a consumer perspective as to what is an insurable item and what value am I prepared to insure that at. The other disruptive influence that we're finding is aggregation, where online platforms are aggregating across multiple insurers, driving costs down, and ultimately are just a sales platform, but it drives efficiency and cost in terms of our space of supporting any claims that may come through from there. So that is a disruptor in our space. I think moving forward, technology advancement in terms of embedded technologies also starts changing the game plan in terms of saying, how do we create insurance that is specifically or unique insurance, unique to the usage of whatever asset you want to insure. So I'll give a silly example, white goods. So if you buy a washing machine and you want to insure that asset, right, at the moment it's insured at the value either of replacement or of the initial cost of that item. If we have a look at a usage model, the same as driver usage in terms of driving a vehicle, the usage model based on embedded technology would be how many cycles does this washing machine do on a daily basis? You know, and what is the wear and tear, therefore, over time on that specific item? Meaning, how fast is possibly the replacement cycle if something breaks? And if your usage pattern is way less than somebody else, the cost of the insurance for that asset may be way different.